So the first thing I want to go over today is Bitcoin. So the reason why we have to start with this, obviously, because it's the biggest crypto. But not only that, this is going to tell us where the whole overall market is heading. And as you can see, we've been dumping on Bitcoin. We've been dumping. I've been mentioning that this is a bull trap all the way up here. That's exactly what happened. We ended up having a bull trap up here. And now you can see we're actively pulling back. We're actively going down now. And we're probably going to end up breaking this bear flag that we're in. So, and I didn't mean bull flag, I meant bear flag. This is a bear flag. And as we're going through this bear flag, they're going to be bull trapping people. They're going to be bull trapping. So this is a very, very clear signal to me. When I see this, I know like it's going to continue downwards. It's usually how it works, right? So that's why I'm expecting this to continue to go downwards from here. So we've also seen the stock market has been going down a lot as well. The S&P 500, the SPY took a huge dip. NASDAQ went and took a huge dip as well. Everything is pretty much dumping. So even stocks aren't immune to what's happening inside of the markets. So we're really seeing everything taking a huge dump and huge dive downwards. So it's no surprise that Bitcoin would be doing the same exact thing. So first of all, what I've been noticing here with the charts, if you look at the %R trend exhaustion on Bitcoin, you can see we are actively coming down here, and it looks like we're going to start to continue to pull back from here as well. You can see last time we had a recovery and it continued upwards, but it doesn't look like it's going to happen like that again. So it does look like now it's probably going to continue downwards here on the %R trend exhaustion. So not only that, we also can look over here at the MACD as well. We actually have what we call bearish divergence here, and that's when you're seeing lower highs on the MACD, which you can see here, bearish divergence, lower highs on the MACD, while simultaneously trying to create higher highs. And that's what we tried to do here on the charts. So you can see lower highs on the MACD being created. And then if we go back here, you can see we were trying to create higher highs the whole time here. We've been trying to create higher highs, and now you can see we've broken the structure. Well, we haven't necessarily broken the structure until we make a lower low down here. That's when we start to break the structure. So that's where I'm waiting for right now. I'm waiting for us to currently break that structure on the charts. So we'll see what happens there. And look, everybody, follow me on Kick. Come on, follow me on Kick. Go to kick.com/Marcellus. Hit that follow button. Trying to grow on here. If you're seeing the clips from YouTube, because I'm gonna clip them up and put it on YouTube, put it on TikTok, all that good stuff. Come follow me on Kick so you guys can see what I do live. You guys can come and see all of this live. It's much better to see it live than just seeing the clips on YouTube, or you can just watch the clips here and there on all the different platforms that I'm going to be posting on. So, you know, whatever floats your boat, right? Whatever floats your boat. But let's move on from that. So we also have the fear and greed index here. As you can see, we were at extreme fear before, but that extreme fear has kind of changed, and it's kind of still in the fear area, but it's no longer extreme fear, right? It's just at the fear and not necessarily at extreme fear at this point. So that's a good thing that people aren't extremely fearful, but people are still fearful inside of this market. So that's one thing that I'm looking at right now. Coming back here on the charts, this is the 4-hour chart, by the way. As this bear flag happens, we're going to see it continuing downwards. We're probably going to end up seeing 60K by the end of this upcoming week. We're going to see 60K or lower. So that's something that you definitely want to pay attention to and get ready for. So yeah. Let me know so far what you guys are thinking. Let me know what you guys are thinking. What you guys think is going to happen next inside these markets. But yeah, it is looking like we are going to have a pretty big pullback coming into here. So yeah, that's what I'm waiting for here on Bitcoin. So that's one thing. That's only the 4-hour chart. Now we can come hit up the daily chart here. This right here is the daily chart. So on the daily chart, the bear flag is even more noticeable here. So you can see the bear flag is much more noticeable here on the daily chart. And again, bear flags, bearish patterns. So there's really there's no excuse for not knowing what's going to happen here, because it's kind of clear what's happening and what's going to continue to happen here. We've already kind of maxed out here on the percent R trend exhaustion. White line is the short-term trend. The blue line is the long-term trend. And just notice how we're literally recreating what happened during the last bear flag. The last bear flag we had, we're literally following that same thing to a T. If we come back here and look at that, we can see the last bear flag is literally playing out in exactly the same way. So this could be our next leg down. And you can look at the percentages from the bottom of the previous one all the way to the bottom of this one here. That was a 25% drop. Then if we try to equate this inside of the same scenario, we can take it from the bottom of here, and we can try to find out the bottom, which if we were going to be doing like the same percentages, I would say anywhere between 50 and 40K, maybe 48K, 47K. But I still like 50K. I still think 50K is a more better area to look for the pullback here. And it's not going to be the complete bottom, but the bottom of this drop, right? It could continue to go down. So it's not the bottom of this bear market, but it could be the bottom of this pullback until the next pullback comes. So this is a bear flag, obviously, like I was mentioning. Let's go to the weekly chart now. Now on the weekly chart on Bitcoin, let's scroll in a little bit. All right, so on the weekly chart here, it's even more obvious, right? If we pull up the percent R trend exhaustion on the weekly chart, we can see the same thing that happened in 2022, the 2022 bear market, is currently happening now. And what is it, March? So yeah, this was around the March time right here. So this bear market is a little bit more, this bear market happened faster than the previous one, right? Because you can see this time period right here, this area right here upwards, this is March, right? This is March of 2022 right here that I just marked. But our March of 2026 is here. So we're acting almost as if we were in June. So if you think about it, April, May, June. So we're almost, it's almost like we're 3 months ahead of the previous bear market. And when we started the bull market, it started on January 1st of 2023. So if you equate this to the previous bear market, we have 3 months that we go back from January. So instead of the bull market starting on January of 2027, maybe it'll be 3 months earlier, right? Going back to December, November, October. So possibly October could be the bottom of this bull market if we're equating it to the previous bear market. So October could be the bottom of this bear market and the start of the bull market. So that's a pretty interesting way of thinking, and it's a pretty interesting way of trying to calculate what will happen next inside of the market. And that's kind of how I'm looking at it. I'm looking at it from that perspective. So yeah, let me know what you guys' thoughts are on that. Moving on from that though, let's talk about some more Bitcoin stuff. So that's the weekly chart for you, the percent R trend exhaustion. It does look like we're ahead of the last bear market by 3 months. If we also look at the MACD, it does look a little bit like we want to have some buying pressure coming in. It does look like it's trying to have an increase in the price here, but only time will tell, obviously, on that one. And also, the case of 2022, we had clear signs of bullish divergence. And see, the way the bullish divergence started in 2022, and look, bullish divergence is higher lows on the MACD. This was the 2022 bull market. Higher lows on the MACD. while simultaneously having lower lows on the charts. So if we go back to 2022, let's do that. Let's go all the way back to 2022, and you can see on the charts, you can see that we were having lower lows on the charts here. As you see here, lows kept getting lower and lower and lower and lower, while simultaneously having higher lows on the MACD. That is bullish divergence in its essence. And it literally starts close to the beginning of the bear market. So the reason why I'm talking about this is because when that bullish divergence stopped, I guess you can say that's when things started to turn around, but they didn't necessarily turn around as much as you would think, right? The buying pressure started coming back in August of 2022 in the 2022 bear market, right? And if you look at the time frames here, August of 2022 technically marks the bottom, or almost marks the bottom. Not necessarily the complete bottom, but it gets close to there. So even though you started seeing buying pressure coming in on the MACD, the bull market still didn't start until later. So look, this is when the buying pressure started coming in on the MACD. The bull market didn't start till January 1st, 2023. So the bull market didn't start until this mark right here. The bull market started at this mark, but the buying pressure started in at this mark. But you were noticing that the price was still actively pulling back and going down and didn't bottom out until we got to here, January 1st, 2023. And then boom, then we really start to have it. And you might be asking me, why am I even talking about this? We always have to equate it to what we're doing now. And when I say equate it, you can say, oh, that's not a word. Yes, it is a word, right? In my dictionary, it's a word. What I mean is we're comparing it to what's going on right now. So if we pull up the MACD right now, this is the start of bullish divergence. Higher lows on the MACD while simultaneously getting lower lows on the price of the charts. Higher lows MACD, lower lows on the candlesticks of the chart. What's happening now? We are now higher lows. Boom, boom. We're probably going to get another one that looks something like boom. And then another one that looks something like boom. And what did I say? The last boom is going to be close to October. And then that's when you're going to start to see the buying pressure is going to start speeding up. Then we're going to be going closer to entering the bull market again. And this is pretty much how the things work, right? This is pretty much how it's working. It's pretty much how it's always worked. And again, if we come back and we look at 2022 going into 2023, it was the same exact scenario. It just happened a little bit slower because there is less volume and less liquidity in the crypto market. But now with institutional investors, we have more volume and more liquidity. Therefore, we have more money flowing. So just as fast as it went into a bear market, it can now go into the bull market just as fast. So we'll see how long this takes. We may see the bull market start before 2027, right? We may see the bull market start in August of 2026 or October of 2026, something. It might not be a whole entire year like it was last time. This is definitely a massive bull trap that is tricking people. This person posted something similar. Bull trap 1, bull trap 2, bottom accumulation. So yeah, I think that's a pretty good way to look at it. Pretty good way to look at it. So yeah, just waiting for things to kind of level out inside of Bitcoin. I know eventually it's gonna happen.